Hey gang, Dave Marcus, New York correspondent with the Federalist here. I'm joined again by Melissa Armo with Swoosh. Um, and she's going to talk to us a little bit about this massive GameStop story. So thanks for being with us.
Oh, thanks for having me. It's an
So
exciting couple of days here.
I it seems like it, but so do me a favor. Let's pretend that like I'm a complete idiot when it comes to the stock market. This shouldn't be too heavy of a lift. And if you were going to explain to someone like me who's very confused about things like short selling and hedge funds and all that kind of stuff, um, how would you explain the basic contours of the story and what's happened over the past couple of days?
Well, first things first, I want to explain to people what shorting is. A lot of people understand when you buy something and the price moves up, you can make money. So if you bought a stock, say at $5 and it moved to $10, you make $5 per share on that stock if you bought it. Lots of people like to buy. Not a lot of people know how to short. Even people that trade the market actively and invest in the market actively do not know how to short. I will tell you that at the Stock Swoosh, what I do is I teach people how to short. I teach people how to go long too, but I teach people how to short, which is a niche, because a lot of people don't know how to short or they don't know how to do it well. Now, that being said, we're going to talk about what's happened in the GameStop stock, but hedge funds do go long and hedge funds also short, okay? And hedge funds can short a lot too. So that is part of the pressure that happened on the stock that we're going to talk about, GameStop. But just to explain what short is, it's basically like you're betting that the stock's going to go down. So you're going the opposite direction. So you can short a stock at $10, and if it drops in price down to $5, you would make what? $5 per share on that. So you can make money betting on something going lower. People don't understand that that's possible, and it absolutely is. You have to have a trading account at a broker in order to short or go long. But the reality is you can make money on basically betting on something to go to the downside.
So how do you do that? That involves borrowing stock and then selling it, and under the assumption that you can buy more back to repay your loan and keep the profit.
Well, the broker handles all that. Really,
Okay.
it's really not that difficult. You have a buy and sell button on your platform. You just press sell or short or buy to cover to exit it. The broker handles all that. Most traders trade on something called margin, which is one of the things we're going to talk about here today that happened with Robinhood. So when you're shorting, you're borrowing the stock from the broker temporarily. And again, a lot of traders trade on margin, which is what caused some of the problem that happened here in the last 24 to 48 hours, because Robinhood and Interactive Brokers and some other places as well were restricting people then to not be able to take certain positions in certain stocks, and GameStop was one of them, because the brokers were trying to protect themselves because, again, they're giving people margin. Now, let me just quickly give you a lesson on margin. What is margin? If the stock costs, say, for example, $100 a share, if you're trading the stock with cash, you need $100 to buy that stock or even short it. But in something where you were trading on margin, you can trade at a broker, and if it's 4-to-1 margin, you would only need $25 to buy something that costs $100. So you can lose money on the flip side and then end up owing money to the broker where they come to collect. But they don't really want to do that. That's not, brokers are not in business to go after people for losses. They just want people to not lose more than they have in their account. You understand what I'm saying?
Yep. Yep. Okay. So we had apparently a lot of people running short on GameStop from these hedge funds. What did the Reddit characters do?
Well, I've never used Reddit personally, so I went on there to look in the chat. The interesting thing about it is there's a group of people in there that were buying the stock. And then there was a lot of people that were buying the stock. And one of the sites, the guy had about 1 million followers. So he had a lot of retail traders that were following him and buying the stock. Today, he's got over 5 million. So this just happened within a 24-hour span of people that are following him, and they're jumping on the bandwagon and going after the stock and buying it. But because of the restrictions today, like I said, from some of the brokers, people were having difficulty with it. And now there's several lawsuits that came out today now where people are suing Robinhood for restricting these trades. But the bottom line is, was what happened going to be investigated? Probably now, because it's gotten so much publicity and so many people were talking about it. People were trying to figure out, is what happened here legal today? Were these people allowed to basically pump up the stock and then push out the shorts? Because what happened with this GameStop, specifically this GameStop, is a hedge fund came in and they had a short position in the stock. That happens. The stock price was really low. It was super duper low, like it was $5. And so most of the stocks that these Reddit people were playing on are stocks that are so inexpensive. So they can afford to buy them, all right? Whether they're on margin or not. It's not like they couldn't possibly do something like this in Tesla. It would be way too expensive. Many of these people have small accounts. Many of these people have accounts where they're risking $100, $500. So these are cheap stocks that they bought, moved up the price. You had a hedge fund that already had a short position in this prior to the buying coming in and pushed it out and went like that and flipped it up. Now, the interesting thing about this is I always get people, because I teach people that are traders, and they always say, oh, if I had more money, this, that, and the other thing, I wish I had more money. At the end of the day, you can make money in the market if you know what you're doing, whether you have $100 or $100,000 or $1 billion. If you don't know what you're doing, or if you do not manage your position properly, which in this case here, this hedge fund didn't, and I'll explain that in a minute. But the reality is you can make money with small money. You can make money with a lot of money if you know what you're doing. The problem is a lot of these Reddit people really have no idea what they're doing. They're jumping on the bandwagon. The stock tight now today. Some people got out with profits. Some people are losing money now because they basically did a trade that didn't make any sense. It's not like the stock had great earnings. It's nothing really changed in the stock itself to create this massive price jump up, because like I said, it was around $5 and it was around 20. Last Friday it was around $70, and then all of a sudden today it flipped over 500. So to have a move like that for no empirical fundamental reason at all is very unique and strange. And that's why the regulators are going to look at that, because the regulators want to see, even though people hate things being regulated, the regulators really want to see orderly markets. And this stock was halted several times today and halted yesterday too. In fact, I'm surprised the stock made it through the day till 4 o'clock, because I thought at one point they were just going to halt it, close it down, reopen it tomorrow morning. And tomorrow is probably going to be the same thing. It's going to get halted a couple times too, because they're trying to get a handle on what's happening. There's too many order flows going through in both directions. But getting back to what happened with the hedge fund and risking money in the market, they had a big position in the stock. And what happened was, we don't know the exact numbers, but they came out and made a statement. It was on CNBC where they disclosed that they had lost about they got out of the position. I don't know if they're out of the whole thing, but they said that they lost about $3 billion. The hedge fund has about $12 billion in it. So they lost a tremendous amount of the fund in this one position, which it really was poor planning and poor decision-making in my mind. And when the stock lifted over the high and made brand new all-time highs last Friday, the 22nd, when the price was around 70 something before it blew up this week, they could have gone out with a loss, a lot less of a loss than they have right now. They had no risk management on that position. And so what the hedge fund did, it really was poor money management. And again, goes back to the point that the day traders that were in this today, yesterday, the other day, if they didn't manage their positions correctly, even though they were up a lot, as fast as you can make money in the market, you can also lose money in the market too. And so people have to know what they're doing if they're going to trade. You can't just say, oh, this is a great idea. I see it on TV. I'm going to buy the stock.
Right.
I mean, that's gambling. And that's not what I teach people to do. And that's not what I personally do. And I don't think it's a good idea. And now the scrutiny that's going to come in, now they're talking about Congress is going to get involved with this. I mean, it's become a massive problem. And I think they've opened up a can of worms. These Reddit guys open up a can of worms now where everything's going to be scrutinized, so that it may not have benefited them in the end.
Now, is this a case where, say, unlike 20 or let's say 30 years ago, not even 20 years ago, I think, when the technology didn't exist for this guy to have 1 million followers, that you could have, a AOL chat room or something where a couple hundred or thousand investors were, doing things together, but not on a level that was going to have this kind of impact on the market. Is this something that would have previously been impossible without what a technology like Reddit allows 1 million people to do simultaneously with small amounts of money?
Well, first of all, electronic trading, not just social media, but electronic trading has changed. It's much faster now. and also places like Robinhood, you can open up an account with a couple $100s. You couldn't necessarily do it in the past. You also don't have to have a license to trade. You don't have to have a Series 7 license in order to trade your own money. So you can do that. And they have no set requirements at these places for the amount of money that you have to put in compared to years and years ago, where you needed a license, you needed a minimum of $25,000. There's so many things that have changed in the last 20 years. It's not just social media. People could have done it back then in the chat rooms, but the way that trades are executed right now within milliseconds so quickly allows, it's a combination of fast trading, okay, and execution in the trades on these platforms, more people in the market because they're allowing more people to trade that have not just wealthy people, but people that have a little bit of money, which is great, okay? It adds volume to the market. It creates, though, the volatility sometimes when you have these fast movements and a lot of people. So what's dangerous for people who don't know what they're doing and have small amounts of money is if they can lose it very quickly, and they can lose. And that is, I think, one of the reasons why Robinhood, even though everyone's criticizing Robinhood about the decisions they made today to not allow certain trades to go off, is they're concerned about people suing them that have accounts with them and saying, I lost money today because you didn't let me do this, or you didn't cover the order, or whatever the case may be. So, but in reality, a broker, when you open up an account, there's so many things that you sign. They can do what they did today. They can close out people's positions. They can say you can't short this stock. They can say you can't buy this stock. They can close out your account. When you open an account, you sign all this stuff.
Right.
I mean, they can do many, many things. They have the flexibility to do it because, they're protecting themselves, specifically accounts that are on margin where they're actually giving you more money than you really have in cash. And you are supposed to be responsible to take the trade and place the trade and get out of the trade. Okay. I think that answered the question.
Yeah, I think so. So let me try to tie this into something that is a little closer to my expertise, which is the politics of this particular moment, because this is a situation where we see strange bedfellows where, Ted Cruz is agreeing with, Alexandria Ocasio-Cortez, where we've seen some progressives sort of suggesting that these Redditors, if not that they had a political motivation, that like they were extremists, and that seemed to be part of Robinhood's justification for what they were doing. Like, how is this intersecting with the political moment? Because it really did, dominate Twitter. I see it on CNN and on Fox News. And what are the politics here? Are they clear, or are they just kind of jumbled?
I don't think it's any clear line as far as political goes, but I think in general, it's just kind of fueling the fire of where we've been heading for the last couple of months, and really probably the last year, where tensions are high, people are in lockdown, people are on unemployment, people are waiting for this $2,000 stimulus check that they never received, and who knows when they'll ever receive it. And so people are at home, and they want to trade, and they want to make money, and they also have free time. So they're in these chat rooms, and it's a socialization. People are at home and they're locked down and they can't go out, and things are closed. Here in New York, you can't even go to a restaurant, unless you want to sit outside in 28 degrees. So people are looking for means of socialization and talking. So the chat room is a way for people to talk about things that they have common interest in. One is stocks, one is politics. I mean, I'm not in these chat rooms. I just briefly looked at them after what happened last night. I think it's just a means for them to socialize like any other place. As far as what happened with AOC and Ted Cruz, it's interesting because she apparently doesn't really want to work with anyone that's a Republican. Even if they agree on something, she came out and said she wouldn't work with them. So I don't really know where that's going to happen, or again, what's going to come of this. Because the Biden administration so far, in the press conferences, really hasn't wanted to touch on this issue whatsoever at all. But I think it is going to come up as the couple of days go on. If it continues to be heated, if the stock continues to be volatile, they're going to have to come out and make a statement about it, or something that they're going to do about it. So it'll be interesting to see what that is.
So, in terms of the future of the market, with a development like this, there's an old story. I think it might be apocryphal, but that JFK's dad, right, managed to get out of the stock market before the crash in 1929, because he heard Shoeshine Boys talking about their sort of penny investments and stuff, and this spooked him, right? I was talking to a colleague of mine who had a similar modern day story. He apparently has a friend whose favorite stripper is like trading in futures. So how worried are you about, I don't know, call it the lack of professionalization or whatever it is in terms of the stability of the market, and people who really are just using it to say like, I want a 401k for my retirement. I don't want to look at the stock page every day. I just want it to be steady and good. I mean, is that under risk at this point?
Well, that's why the regulators are probably going to come in and put the kibosh on this in some way if it continues. That's why Robinhood restricted traders from trading other stocks besides GameStop. AMC was another one of them. I think BBBY was another one. And there was a couple stocks that they said you're not going to be allowed to trade these. In fact, they took them off the platform. Interactive Brokers, the same thing, because they don't want this to turn into something where regular people that don't trade, that just have their money in a 401k and a long-term investments, that they're affected by this, or that it would in fact affect the overall long-term market. The one thing I will say, again, getting back to the cost of these stocks are not stocks that will move the market. If GameStop goes up or down, if AMC goes up or down, it's not going to affect the S&P. Apple would. Okay, but these people would not be trading Apple like that. Why? Because they can't afford to buy Apple at the price that it is right now to do this. They don't have the money to do that. The 5 million people that are in it don't all have the money to do that. Some might. Supposedly, one guy made $48 million and had been buying this GameStop and talking about it in his Reddit for the last several weeks and possibly even more than a month. Someone like that, they could investigate that person, and that person may be in trouble. I don't know if they're going to allow it. Again, it all goes down to the fact is how far are they going to take it, because they need to have normal markets moving in just in a nice flow where sometimes you can move up, sometimes you have a move down, but overall, you don't have something getting halted all the time. You don't have something where people are losing their life savings. While some people made a lot of money in this overall, it'll be interesting to see what the percentages are of people that made money or lost money on this. So I think the regulators will make sure that markets stabilize, and they will do whatever they need to do to make this happen. There's been a lot of talk as far as people being altruistic about this. They're going after the hedge funds. They're tired of this. They're doing this for a reason. This is a whole big thing, or whatever you want to call it. In my mind, when I read the chats on Reddit and just knowing what I know about the markets, for the last 12 years, I'm telling you right now, I just can't buy into it. People did this to make money. That is it. Boom. Whether they were the Reddits, whether they were the hedge funds, people trade and invest money in the market for one reason and one reason only: to make money. There might be secondary other things that they're talking about, or reasons that they're doing this to teach the hedge funds a lesson. But at the end of the day, in my opinion, people did it for the purpose of making money, and people are doing it even now for the purpose of making money. So they will try to regulate this as much as they can so it doesn't affect people's long-term 401ks. And one of the reasons why remember when the market sold off really, really hard? It was almost a year ago. Mm-hmm. It was right before the lockdowns. It was the beginning of March. We gapped down one night and fell off a cliff when everything hit.
It was COVID. China, right? That was the China travel ban, right?
Yeah. And it just came out of nowhere. I'm sure that people, like you were talking about, this guy, that guy knew about. I'm sure people knew about that. I'm sure people knew about that. I'm sure people knew about that. And in my opinion, one of the things that Trump was criticized about was not closing down the country as far as the travel earlier. You know what? If he had closed it down January 1st, I don't think it would have mattered. I think it was here in December. I think it was here. There's so much travel that comes back and forth just from New York to China. Mm-hmm. I think that it was here long before, at the beginning of 2020 anyways, that it wouldn't have mattered. It was going to spread. It spread worldwide, and that was the end of it. So I think that, as far as these things go, sometimes people do have information. It may not necessarily be insider information, but They hear something, or they may have known someone in China and said, wow, this thing is deadly. And, people may have sold their positions before that big sell-off, but the recovery that we had after that bounce that happened then into those lows that were at some point in March has been astronomical. We rallied and made so many brand new all-time highs the rest of the year in 2020. So people in their 401ks are up. people are up. And I always tell people, when you go to your financial advisor, if you don't know anything about the market, you don't know how to read a chart, you don't know how to pick stocks to trade in, and you're just in a, most people are like in a bucket. Like they have their 401k, they're in a bucket. They're in this one, this one, this one. If you don't understand it, ask your person to explain it to you, or take a class like mine and learn how to read it yourself if you don't trust the person that they know what they're talking about. Most people are not heavily invested in one thing. I say, don't risk the farm in one whole thing. And that was the problem with this GameStop and even the AMC. People are just throwing, I heard people, they're just throwing all their money in these stocks. And that's very dangerous. And no one should do that. There was a saying by Jim Cramer, I don't know what year he said this, but he said, bears make money, bulls make money, and pigs get slaughtered. And I think people were saying that this GameStop was going to run up to 1,000. I didn't see that happening. You can't have a stock like that, go 1,000% without hedge funds buying it as well. And once the news came out that this hedge fund had shorted it and lost a lot of money, I think at the end of the day, a lot of people kind of just wanted to stay away from it, just wanted to stay away from it. I personally didn't trade it. I have no interest in trading it. It's way too crazy. Like I said, it's basically gambling. I have a strategic reason for why I'm doing something. And that's how you can be consistent in the market and consistently make money in the market. This idea of getting rich quick, it's kind of like, winning the lottery. Could it happen? Yes. Is it going to happen to a lot of people? No, it's not.
Yeah. Well, I really appreciate it. This clarified a lot for me. I think I'm going to continue to stick my money in random drawers around my, no, just the other day I opened a drawer I hadn't for a while. They were like $13 and a half a pack of cigarettes. So I was thrilled. But this was, yeah, see, I don't think the money grew in there, but it was there at least. So thanks a lot. I really appreciate this. I think it was very useful for our viewers, and I guess we'll see where this goes.
Talk to you next time. Thanks, David.
Okay, thanks.